Welcome everybody. Today we're going to talk about how does flipping houses affect your taxes. What do you need to know about when's the tax man going to come calling, how you can plan for it, how real estate can help you lower your taxes in many different multiple ways, why so many millionaires like using real estate to help cut back on their tax bill, and how you can do the same. We're going to deep dive into all of this. But first thing, I need to make a confession, guys. This is not live. I mean, I'm here right now, but I am pre-recording this because when this airs, I'm going to be on spring break with my two boys. And we're going to spend some time hopefully getting the final few days of skiing in before they close the resort for the summertime. I guess it's springtime right now, but spring skiing is amazing. And if I'd like to know if you've ever been skiing before. Put it in the comments. I will go back and read all of those. But questions you'll have today as you ask them will get turned into videos that I'll create, and I'll get those answered either next week or I will do them as Just Ask Ryan videos. So if you're not currently a subscriber, please hit the subscribe button. And as you ask any of those questions, type them in and I will be answering those for you as we go here next week or in Just Ask Ryan videos. All right, guys, let's get right into this. Taxes. How does flipping houses affect your taxes? What you're going to learn today is several things. You're going to learn the different types of taxes, what they are. You're also going to learn what you pay taxes on flips, how much you're going to end up paying on those, how to save money on taxes. You're going to learn a little bit about 1031 exchanges. You're going to learn a little bit about depreciation, cost segregation, investing strategies that are tax efficient, which is what we're going for. Now, I probably should just start all this by saying I'm not a CPA, I'm not an attorney, but I have dealt with this over the last 20 years multiple times. We have attorneys that work for us. We have CPAs that work for us. But this is just general informational advice. You're going to want to make sure you double check and get that. But this is for education, right? This is for you to understand kind of some of the things that are out there. So our agenda is the same as always. We do welcomes and updates, which I'm doing now. Thank you for so many of you that are being live with us. If you're not live, join us live next week, same time, same place. We go through real estate news and what's happening in the areas and in the markets. We talk about a finding tip of the week. Every single week, I will give you a tip that you can go and implement that week to find properties. I'm going to be doing that same thing today like we do every single week. And then I get into the topic of the week, which is the tax strategies, is what we're going to be talking about today. And then we do the free t-shirt giveaway. Every single week, I give away a t-shirt. I pay for shipping, pay for the shirt, send it your way, and I send a mask just because we want to be COVID friendly here as well. And then I have a free tool of the week. It's a tool that you can use and implement absolutely for free. I'll give you a way that you can get a copy of that as well. As I said earlier, this show is for entertainment purposes only. And before making a financial moves, consult with a real estate professional, attorney, CPA, or other professionals in a specific subject matter. Everybody's situation is different. There's no one-size-fits-all approach. DHM may receive payment on the show for sponsorships, guests, in the forms of books, giveaways, items, discounts, or other remediations. As with anything in life, results come from education, following a system, hard work, and a determination to follow through until the end. Welcome. If you are here with us live, please state your first name and the city and state that you're investing in. If you're listening to this as a recording, please do the same. Put it in the comments, because one of the things I do is create content around that. And you'll see some of the examples, some of the things we look at are going to be based upon feedback that I get. So those that are here live, put it in the comments, in the chat. And if you're not here live, put it in the comments. If you're watching this on the recording, please also join us live Tuesdays at 6 p.m. Eastern Standard Time. The benefit of that is you can ask questions as we go. Well, you can ask questions unless I'm skiing with my boys, which is happening when you're watching this. But normally I'm here live unless it's a holiday or something like that going on. But I always will have this content rich, ready for you for something you can go and implement today and make some success happen. Let's talk a little bit about our t-shirt giveaway. If you're new, we give a t-shirt away every single week. At the end of each week live cast, we announce who the winner is. So today I will be announcing last week's winner, and today the comments and things that you do will help you determine that you'll be next week's winner that we'll be announcing next week. So if you want a t-shirt, raise your hand or put it in the chat. Let me know that you want a t-shirt. But let me show you these cool things. We got a couple of t-shirts. We're working on a new design as well. This is one of my favorite. It's our I Flip and Did It shirt. And then we obviously have our COVID mask that we're sending out. Whoops, that's upside down. There you go. And then this is one of our project managers' favorites, because when you go through rehab, it's like, I made it through rehab, not to mention the double meaning there, which we find just mildly hilarious. Asking great questions is what's going to help you earn a t-shirt like that. High interaction, engagements, commenting on the recorded video. As we do this live, then what happens is the recording of this becomes a video as well, which is really great, because I get a lot of people that say, Ryan, can I get those slides? And I say, absolutely. Just check out the video. It'll be posted the next day, basically, and you can see all of that. You can pause it, look at it, and everything else. In addition to that, I've been accused of talking a little fast, just like maybe once in my life. And so you can slow it down, you can pause it, you can watch it, and go back and get those nuggets out of here that I'm going to be throwing down for you. So every single week we'll choose that winner, one winner. I would love it to be you, so please give some high interaction, make some comments, and let's make this a successful week for all of us. And I'd love you to be the t-shirt winner. If you like these live casts and you want to see them continue, I really need your help. Okay, we are closing in on 5,000 subscribers, and I am so excited to hit 5,000 subscribers. Right now, we're at 4,870, and my goal is to get to 5,000 by the end of April. So I've got 130 new subscribers to go. If you are currently not a subscriber, if you could go and hit that subscribe button and then post in the comments that you are our newest subscriber, I would greatly appreciate it. I work extremely hard to bring great quality, free content to you to help you in your real estate investing, and I know you will be happy with it, because every single day I do a new video. These are some examples like a BRRRR deal or finding absentee owners. So every single day I'm releasing a video like this. They're typically anywhere from 3 minutes to 10-minute video about a specific question. And if you've got a question that you'd like to have me answer, watch any of these videos, type it in the comments of that video, and then I take that and I will create a video around it for you and for everybody else who is in the YouTube world. So check it out with those videos that are coming. So please hit that thumbs up to this video or to others, hit the subscribe button, hit that bell notification. DoHardMoney is our YouTube channel. And it's always great when you leave a recording, and telling somebody else about it is the biggest compliment you could possibly give me, and I certainly appreciate it. Today, what you're going to get, every single week, I give a free gift, a tool, resource, something that you can use. Today, what we're going to be giving away is a property value analysis sheet. That's this sheet that's right here. It really helps you when you're determining your comps and how to comp properties appropriately to make sure you get those values right on. So it goes through the actives, it goes through the solds, it goes through the as-is, the ARV, the FHA type properties, so you know both from sold and actives. It helps you identify the areas and so much more. But you get a free copy of that. There's a link to download that. I'll be giving away at the end of this live cast. So stick around and you can get a copy of that. A real estate market update. Let's talk about it. But I got to grab a drink first. This is usually where I pause and grab a drink, because we have a lot to go over today, guys. Thank you to so many of you that are with me today. I really appreciate it. Real estate market update. Let's talk about it. There are more real estate agents than there are homes for sale in the United States. Is that crazy? For every one real estate agent that is licensed, there is not even one home for sale. That is insane. So that gives you a little bit about the story about what's happening in the market right now. How the U.S. housing market was rocketed by COVID-19 and where we'll go from here. The lack of existing homes was only part of the problem, though. Builders have struggled to ramp up new construction on homes, particularly the most popular single-family home models. So we're seeing that as well. How the U.S. market was rocketed, we talked about that. And what we're talking about here is once the foreclosure memorandum ends, homeowners haven't been able to finance, rebound from the crisis, may be forced to sell their homes. This could also add to the supply of properties on the market. That will help alleviate some of the scarcity concerns, says lender Andrews. Basically, they're saying, if when this moratorium ends, having these homes come on the market will actually be helpful because it needs some absorption. We need some properties. The housing boom that never ends already wiped out all the short-term sellers. When COVID-19 hit, even Canada's own National Housing Agency seemed sure this was the end, predicting a dive going down in home values ranging from bad to catastrophic. But instead, the market went on another record year, even surpassing the gains of the red-hot United States market. Chicago real estate market update: sales up again, inventory ridiculously low. After looking at the February data, I'm thinking that maybe the Chicago real estate market really is doing something more than simply making up for the lost activity during the initial lockdown when the pandemic first hit. Maybe we really have entered a bull real estate market, though the bull may be losing a little bit of steam. What is happening in your area, guys? Let me know. Put it in the chat. I'd be interested in what you're seeing out there from on the ground. Denver real estate agent says offers 90 to 100,000 over asking prices lost, which basically means they offered 100 grand more than what was asking and they lost the deal. They did not get the purchase on that property. Where have all the housings gone? You guys are seeing a trend here. We've got to be out there finding these deals. That's what we're going to be talking about here in a minute, is finding these off-market properties because they're not on the market. Where have the houses gone? You can see up here, we're basically at 1.2 million and almost a 1.5 million homes that are on the market. These are homes that are for sale in the United States. And you can see that was back in 2016 is where it probably hit its peak. It's been going down steadily since then. When we started 2020, it was somewhere about 900,000 homes, and we're basically at 468,000 homes on the market. There's so few homes. A lot of that fueled by people that just are deciding not to move, which we'll talk about here in just a minute. Mortgage rates are starting to climb after being gone down for so long. Mortgage rates are climbing, like for this example, 27 basis points is what it's gone up, which is a moderate increase, nothing crazy, or I should say mild increase. Mortgage delinquencies in November fell to their lowest level since the start of the coronavirus pandemic. Just under 6% of all U.S. mortgages, 2.7 million homes, were in some stage of delinquency at the end of November, according to CoreLogic. The proportion of long-term unemployment also remains troubling, with 4 million people who have been actually looking for work on the 27 weeks. I had a jobs report alert that came out today, and jobs were created a little bit less than what they were expecting right now, but it was really close. So I think we're going to see the tide turning on this and continuing to improve. Mortgage delinquencies in November fell to their lowest level since the start of the pandemic. 2.72 million homes remain in forbearance. February 2021 monthly housing market trends report more than 200,000 new listings are missing from the housing market. It's the same thing we've talked about. There just are not enough houses. So one of the things you can do if you really want to help this is find these properties, make them beautiful, and get them sold. It helps the inventory. It helps the community as a whole. National inventory declined by 48.6%. There's half the number of homes now than there was last year. The inventory of newly listed properties declined by 24.5% nationally and by 23.5% for large metro areas. The February national median listing price was $353,000, up 13.7% compared to last year. I'm really interested to see how the March reports come out. I'm waiting to see those, and then we'll be able to give you some data on that as well. But 13.7% increase compared to last year is insane. Nationally, the typical home spent 70 days on the market in February, 11 days less than the same time last year, meaning they're selling faster, 11 days faster than they sold for last year. The typical homeowner in 2020 had remained in place for 13 years. This is what I was talking about earlier, up slightly from the 12.8 years and well ahead of the 2010 8.7 years, according to Redfin. About 1 in 4 homeowners has lived in the same house for 20 years or more. This is interesting because the longer in those houses, the house is going to need repair and updating, and at some point they're going to want to sell, either a change of life circumstance, or they're moving into a retirement home, or they need to downsize. And so there's going to be opportunity there, which I'm excited about, as you'll be seeing, which we've got some videos on how to find properties that have had seniors in them at this point. I'd be really interested in this question. If you'll type in the comments or in the chat, how long have you lived in your current house? I'd like to get an understanding. Are you above or below that? I think I've been in my house 7 years right now, my current house. So I'm definitely below that 12.8 median, but I'll be interested to see that. But I kind of have a trend for that. In the last 21 years, I've only lived in 4 different properties. I bought a duplex originally that I turned into a threeplex. We were there probably 3 years, I want to say. And then we bought a small single family house, and we were there, I don't know, 5 or 6 years. And then from there, maybe 7 years. Then from there, we bought another house. Hopefully it would be a big investment. It didn't turn out quite as good as I was hoping for. We're probably there 5 years. Then we've been in our current house about 7 years. So I've been below the median, but I'm also kind of in the business. So, but I'm not planning on selling at this point. So I'm hoping to be one of those 20-year plus people. So anyway, I'd be interested. Type in the comments or the chat, how long have you been in your current house, and are you above or below that national median? The U.S. housing market, high demand will continue to keep prices high. Estimates range from 2% annual increase to around 6% annual increase of what they're thinking. But look, a few slides ago, we talked about February being 13.7%. So we're outpacing what the economists were thinking. Daniel is saying, Hale is saying, we're going to settle somewhere between before COVID and during COVID, says Realtor Chief Economist. Let's do this property finding tip. So what's happening in your area? Type it in the comments below. Let me know what you're finding in your area, what you're seeing in your area, and how long you've been in your current house. Would be really interesting for me, and I think for everybody else as well. All right, property finding tip. Tax delinquencies. Is what we're going to talk about today. So this is my property finding tip of the week. Every single week, I like to come up with something you can use to go find properties in your marketplace, especially where we're in a really competitive market. So tax delinquencies. This is when someone is behind on tax payments. This isn't IRS. This isn't the state. This is the property taxes that are delinquent, meaning they're overdue and they need to get paid. So property taxes are senior to all liens. Let me make sure you understand what this means. A property tax is before a mortgage loan, meaning property taxes are superior to any type of loan. So if those don't get paid, then they can foreclose, take the property, sell it, and then they can get their money out of it. They can foreclose out a mortgage lien. This is very rare because the lender is typically going to make the payments on the taxes to make sure they don't get into a situation like that. They're going to be making those tax payments because they do not want to run into trouble. And this is important to real estate investors. Why? It's important because it means that there is some kind of financial problem. If somebody's behind on their property taxes, there's some financial problem going on in their life. It typically means that there's an opportunity for us to help out. Something is going to have to happen. Either that property's getting foreclosed or those taxes are going to get brought current for the property taxes. We need to get in the middle of this and see how we can help somebody out. And all the notices, when you're behind on property taxes, they get all these notices saying you're behind, you're behind, you're behind. You're getting calls, you're getting letters. If you're the one that's behind, the mortgage company is dealing with this. None of these are going to solve the real problem. The real problem is they're going to need to liquidate the house unless they've got a bunch of cash sitting somewhere. They're going to have to liquidate the property. So how can we help these people is really what it comes down to. How can we help these people? And one of the things that we can do, and I'll show you here in Investor's Edge, this is how you can find them. But the way we can help them is help get that taxes paid and help them transition to something that's going to be more affordable and economical for them. So what we're going to do, I want to show you just a little bit here. I just want to get, okay, here we go. So if you're one of our members, you can hit the login button here, and that takes you to all the tools and resources and software and everything we have. One of those softwares that we've got is Investor's Edge, which you can see here, and you come to Investor's Edge. We've got 6 different softwares here. And then we break it down to getting started, basics, finding, estimating, valuing, offer, negotiating, scope and bid, renegotiating, funding. And then you can go through. So anyway, but here we are, and we're just going to type in Chicago. Okay, Chicago, Illinois. I pick on Chicago a lot just because it's pretty big, so it makes it a little easier. So let's just come down here. We want to find people that have tax liens. So I'm going to come down here to filter, and I'm going to come down here to liens. And I want to make sure that the lien amount is at least $10,000. And here's why. If your lien's for less than $10,000, you may be able to find a good way to figure it out. Maybe put $5,000, right? But if you've got $10,000 problem, that's probably a pretty big problem. The other thing I'm going to come to is I'm going to do estimated value. Because I want to make sure it's at least worth $75,000 because I don't want to deal in the really low-end neighborhoods. And I want to make sure that $550 and maybe on the high end is basically what I'm going to look at. So I want to look at things between $75 and I want to look at things between $550. And the lien amount, I want to make sure the lien is at least $10,000 or more. So I can get pretty specific on the type of lien I'm looking here. So I can look at tax liens exclusively, or I can look at other liens. But these are just tax liens because it's what we're talking about. So this is real live data as of right now. This is in Chicago, Illinois. These are tax liens for $10,000 or more, where the estimated value is $75,000 to $550,000. There are 2,389 properties that meet that exact criteria. And what we can do is we can then market to this list. What we can do, I'll just pick a few of these just to kind of show you here. So let's just take these 3. You could add all of them if you want to. This is just a demo account here. So we'll do tax liens, and we'll say, let's see, Chicago. Anyway, you can name it whatever you want. I usually do the city, the state, what it is, and then some price ranges because you can make it pretty long. So I like to be able to go back and look at those lists. One of the other cool things is you can start a hot sheets where if something new actually comes onto the list, it'll email you so that you can then go and it'll automatically add to the list, but you can make sure you put some marketing in place on that as well. So while that's loading up, I want to make sure we're on the same page here. We've gone to Investor's Edge. We have looked at a specific lien type called tax liens. We've looked for $10,000 or more, estimated value of $550 or less, and $75,000 or more. And now we're going to start marketing to this list, calling it. To call, we actually have to do a skip trace. We can do a voice broadcast, which automatically just leaves a voicemail for people. And then we can do some postcards to this list as well. In addition to doing some SMS text messaging and some emailing. If you're going to email, you have to skip trace as well. But before I get into this, what do I say? Let's jump back here. So those properties have been saved. I can come here to skip tracing. I select my contacts on the skip tracing. I can come here to tax liens for Chicago, and I can move forward with these properties and go ahead and do a skip trace on these specific guys. I'm not going to do it because I don't want to show like personal information and phone numbers right here, but you can easily do that. Now, when you do the skip trace, you will be able to, you will then have the phone numbers, the email addresses, and then you can come here to do some campaigns, okay? So you start building out one of your first campaigns. You can give it a name. Let's see here, view recipients. Let's put these guys in there. Tax liens. Done. Campaign name, we'll just call this test. And select the groups. We're going to come down here to these Chicago properties. We'll just add this group, and that's all we're going to do. We'll save these puppies up. Now, we can start a website if we want to. So when we send out a postcard or something, it'll go to that, or we can add an activity. This is postcards, emails, and voice broadcasts. So you can hit the email and go through that. Or you can, let's come back over this way. We can just come here to the postcards. And let's just hit next on these guys, and you can actually just send out the postcards. So you can put all the information in here, and it auto-fills if you want to. So we can come and change, whatever. This is our demo account. So Ryan, so we can come in and edit all our information before we send out these specific postcards. Okay, so then the question is just like, what do I do? What do I say? Once I get somebody. And so all you're going to say, if you're making that phone call, you're going to say, I'm looking for the owner of 123 Main Street. And they're going to say, yes, this is him. You don't want to put both these sentences together. You want to pause, and you're going to get some feedback from them. I'm looking for the owner of 123 Main Street. Yeah, what do you want? Sometimes they may think you're a bill collector. Sometimes they're like, what do you have to do with my property? But I'll tell you this, you've done a pattern interrupt. You've caught their attention because you're calling about 123 Main Street. And they're like, oh, who is this? What do you need? And you're simply just going to say, I know it's a random question, but I was just wondering if you're interested in selling. And then see what they say. And then you can continue the dialogue. And if they say, no, I'm not the owner of 123 Main Street, because when you do the skip trace, you're going to get the last known numbers, and some of those are not going to be their current numbers. And you're just going to say, I'm interested in some properties. I'm an investor. I'm wondering if you know of anybody that's looking to sell a home. And they may say, yes, I do. And then you can move forward with a dialogue on that as well. I hope this has been really helpful for you. If it has, please make sure you subscribe to our channel and hit that thumbs up button and leave a great comment as well. Okay, guys, we're going to get into the main event here, but I got to grab another drink of water. Before I do, have any of you tried to do any tax liens? Now, there's a difference between tax lien investing and going after properties that have a tax default, meaning a property tax default. There's a big difference between those two. If you're going after the tax liens, you're actually the one buying and paying the lien, and then the government is, if they collect money, the municipality is going to be paying you your interest. Some of those are set interest. It's different in every single state. What we're doing is we're going after people that have a property tax lien and going after and saying, let me buy your house, and that will pay off the tax lien in the interim when we close, and then you can walk away from the property and I'll own that property. That's basically what we're doing in that scenario. Both of them are good investment strategies. We want to be clear as to what we're doing here. Okay. How does flipping houses affect your taxes? What you're going to learn today is the different types of taxes, what you need to pay on flips, how to save money on taxes, 1031 exchanges, depreciation, and cost segregation, and some investment strategies with real estate that are very tax efficient. Okay, guys, so the myth of paying taxes. I just want to be really upfront with this. In the end, I want my tax bill to be as high as possible after I've done everything I can do for tax planning, right? So my goal is not to pay as little as possible in taxes. My goal is to pay as high as I possibly can in taxes after I've done all my tax planning to try and reduce that. Because you know what that means? It means I'm making a lot of money. So the higher that tax bill is, as long as I'm taking advantage of every tax planning I can possibly do, which I do a lot of that, I want to pay that tax bill as high as possible. So, I mean, I don't want to pay taxes just like anybody else, but really, I want to pay as much as I possibly can because that means I made a lot of money as long as I was being smart, which is one of the things that real estate can do for you is help you with some of your taxes and reducing that. So this is about making lots of money and being strategic about tax planning. That's the goal. That's what we're trying to do here. So a quick note, I talked about this, but I am not a CPA. I'm not a tax attorney. I've paid lots of money in taxes for my real estate investing. This information is just for educational purposes. So check with your local CPA, attorney, those types of things. But for general educational purposes, different types of income, right? You have earned or active income, right? Then you're going to have investment income, passive income. So there's different types of taxes. So let's talk about federal taxes. Each state is going to be a little different with what they tax. Some states are going to have no taxes. Other states are going to have a complicated. Other states are going to have a flat percentage tax, like where I live. It's going to be different. So I'm not going to tackle the individual state portion of the taxes. We're going to be talking about the federal portion of those taxes, and then you can see how that relates for a state by state as you talk with your CPA. So just be aware there's also state taxes as well. So let's just jump into this earned income. So this is the scale of earned income, which goes from a 10% federal tax rate to a 37% tax rate. This is taxable income for singles, and this is married couples filing jointly. So this is 10%, 12%, 22%, depending upon how much money you're actually making here, is going to make the determination as to what percentage. But there's a few caveats, which are called those are the tax brackets. If you make $90,000, how much tax would you pay? Well, let's just look back here. Well, let's see. $90,000 fits in the 22% federal. So would you pay 22% if you made $90,000? The answer would not be correct. It is not that you're going to pay $21,600 or 24%. What it is there's this idea called tax brackets. So let's talk about this. You pay taxes based upon the tax bracket the money is earned in. So a quick example here. For this tax bracket for $90,000, the first is going to be 10% is going to be paid of $1,975. Then the next $60,000 is going to be paid at a 12%. And then the $9,000 left will be paid at a 22%. So your taxes are going to be $11,380, not the $21,600. So it's important to realize that these tax brackets. However, if you are in these higher tax brackets, it's not gonna. If you get into this higher, over $622,000, it's always gonna be at 37. It's gonna be bracketed, but you're gonna be at 37. And so you're saying, how can I make things happen? And one of the things that you're gonna want to do if you're in this 37%. You're going to want to try and drop down, get as much income you can to down to be in the 35%. Or if you're in the 22%, you're saying, how can I get rid of some income so I can be under the $80,000 so I can be taxed at a 12% for that portion rather than a 22%? Because that's a huge jump right there, going from a 12% to a 22%. Okay. We're going to talk about that. We talked about this example. Oh, this is all based upon earned or active income. This is taxed at the very highest rate. So earned income is the most expensive tax that you're going to pay. Let's talk a little bit about invested income. This is taxed typically at capital gains. This is really important because capital gains is typically more favorable than ordinary income. But to qualify this, you have to own the investment for a year and a day minimum. So if you own it for less than a year and a day, you're not going to get this long-term capital gain. So typically when you're dealing with a fix and flip, it's going to be categorized as ordinary income because you're taxed on the gains. So 2020 capital gains, if you were between $0 and $40,000, you're going to pay a 0% tax on capital gains. Now this can be, all of these numbers and percentages can change year to year or from president to president. And so you're going to want to look up the newest rules on this, but this gives you an idea for now what it's looking like. If you're between $40,000 and $400,000, you pay 15% in capital gains, which is a whole lot less than the 22% to 37% you're going to be paying in ordinary income. So that can be really beneficial for us as we're dealing with that and thinking about long-term capital gains. So if you made $35,000 in long-term capital gains, how much would you pay taxes on that income? The answer is 0. Okay, so the 0 is what you're paying because it falls under that income bracket of $40,000, which is really important to be thinking about here. And it's one of the things, if you're real estate investing, keep a house once in a while for yourself and hang on to it for a while. And that gets us into this idea of passive income. this is typically taxed as ordinary income. It's better to have capital gain tax than ordinary income, but many times this is just not possible. Like I said, with a fix and flip, if you're holding a property for over a year, it may be way too expensive to do that. So keep in mind, you're working a job and paying ordinary income. So doing that on a fix and flip is not a bad thing, but it is going to get you into higher tax brackets potentially. So you've just got to be aware of that. And this is where these long-term BRRRR deals come into place, right? This is where BRRRR is so important into what we're doing. If you want to build long-term wealth, keep a property every year for yourself. I was talking to a fix and flipper. I do a lot of funding for him. I do multiple deals a month for him. And, it's just like, hey, how can I get ahead? And I'm like, well, you're making a lot of money. And he's like, yes, but I'm paying a lot in taxes and I'm not building long-term residual wealth. And I said, yeah. So every year, keep a property for yourself. Do that every single year, or keep 2 properties for yourself. Then later you can liquidate some of those properties, pay it in long-term capital gains, and reduce your overall tax bracket, which can be really helpful. So tax advantages to owning real estate. There's a lot. There's the small business deduction. This is why when we talk about BRRRR deals, you're fixing up and you're renting it. So one of the things that you can do when you start doing those types of deals is small business deductions. You can write off your cell phone, you can write off your gas, your paper, your printer, your computers. Those things that may have otherwise been taxed as ordinary income now can get written off and you're not paying it. It still costs money, right? It's not free, you have to pay for it, but what you're doing is reducing your tax liability based upon that. The next thing is depreciation. This is the deduction based upon the perceived decrease in value of real estate, which basically says every single year there's so much that you can depreciate. The other one is mortgage interest. What you're paying in interest on that loan, you can write that off as well. And then deferred gains via a 1031 exchange. That's a section of the code. Okay, so more tax advantages. You've got tax advantages based upon maintenance and repairs on the property. If you have to do work to the property, that can be a big tax advantage for you. Services like legal or accounting or consulting all can be written off. Utilities can be written off. Property taxes can be written off. All those things can be written off, which will help lower that tax bracket that you're finding yourself in, while in the same time, hopefully getting you into a long-term capital gain situation. But if you think about this on a BRRRR type strategy, if you were going to fix up a property and sell it, you're going to pay a lot in taxes, but if you fix up the property and rented it, you won't pay taxes until you actually get the gain. You'll just be paying taxes on the income that you're getting along the way, but that'll be offset by a lot of the write-offs that you're able to do that we were just talking about, like gas and utilities and property tax and mortgage interest and those types of things. Okay, accelerated depreciation. This is an accounting method to depreciate expenses earlier than the standard straight line depreciation schedule, which basically means, hey, if you have a house, you can depreciate so much every single year. But if you do accelerated depreciation, they put a schedule together which lets you do it faster than you would be able to in a standard straight line depreciation. These write-offs are so helpful. So let's say you had $55,000 in long-term income. What your tax bill would be about $1,500, which is $55,000 minus the $40,000. This is all long-term capital gains, right? So you'd have about $10,000 that's taxable. If you had $10,000 of deductions, your taxes would be zero on that $55,000. And this becomes even more important the higher that tax bracket goes up and the higher your income ends up becoming. So let's talk a little bit about fix and flips. What about fix and flips? Let's say your income is $70,000 a year. You're married. You're filing jointly, husband and wife type situation. You make $34,000 on a fix and flip after all costs. So this is after interest and everything you've paid. You net $34,000, which by the way is pretty close to what our average client ends up getting. You had about $5,000 in business expenses, cell phone, vehicle, that type of stuff. So prior to the federal tax, this is what your tax bill would look like. You've got a $70,000 income. You're at a 12% federal tax bracket. You're at $8,400 in taxes, right? That's basically what you're looking at. Again, the state taxes we're not bringing into the equation here. Now, let's talk about your estimated tax bill. $70,000 income. You made $29,000 on the fix and flip, which is $34,000 minus the $5,000 in business costs. You've got $99,000 of taxable income is basically what we're estimating here. remember the brackets, right? Remember how these brackets work. So if you're at $99,000, on the first $19,000, you're going to pay 10%, which is $1,975. You're going to pay 12% on the next $60,000. You're going to pay 22% on the next $18,000 for a total tax bill of $13,360 for your federal. So your tax bill would be $13,360 total. Before it was $8,400. So your tax basically went up $5,000. $4,960 is what your tax bill went up. So the question is do you want to trade, $35,000 for $5,000 in taxes? And the answer is I want to do it every day and twice on Sunday. Is what I'm looking for. A profit of $34,000. I'm paying $5,000, so I'm making basically $29,000. And this is based upon ordinary income. This is not based upon long-term capital gains. This is based upon ordinary income. If you can turn that into long-term capital gains because you burr the property or you rent it or you hold it for a year and a day, this gets even better. So I see people that are like, I don't want to pay all these big taxes. I kind of have to just have a little wake-up call here. I find most people are saying that just want to be kind of lazy, because if you can trade $34,000 for $5,000 in taxes is going to get you $34,000 where you net $29,000. That's worth doing every day, all day long. Okay, so this is why I stand back to say stop worrying about taxes, okay? Stop worrying about taxes, right? Get a good CPA, understand some of these strategies, put them into place, and go out there and make as much money as you can. Your goal is to pay as much as you can in taxes after you've done all the tax planning and all the strategies that we've been talking about. So make as much as you can, convert as much of that as you possibly can to long-term capital gains, and stop worrying about taxes and go get to work making money. Hire that good CPA firm to help you tax plan. Set up a tax savings account. I recommend a high yield savings. Let me talk about this because this is really important. I've seen a lot of people that get started and they find themselves in a problem because of taxes. You've got to decide a percentage that you believe that your tax bill is going to be at. You can use some of those figures we've had or talk with a CPA. And then as you're making that money that's not having taxes pulled out, you have to pull the taxes out for yourself. That's something. So it's $35,000 gains, let's say, on a property. We're estimating those taxes to be about $5,000. You need to take that money and put it somewhere. So that when the tax man comes next year, you can be like, okay, I've got the money set aside to do that. That's what I do. That's what I highly recommend. People that don't end up spending the money on stupid stuff, or they spend it on good stuff, but then when the time comes, they don't have the money to pay the tax man. So you've got to put that money aside. I recommend having a high yield savings account. Right now, it's not really high yield. It's a lot better than most banks. And so I use Synchrony. I use Citizens. You can check both of those out online, and you can put money into those accounts as you do deals for your tax portion so that it can make a little interest while you're waiting to pay the government along the way. So, but stop worrying about taxes. All right, guys. Our complete system that takes brand new investors through funding their first deal is called our Find Fund Flip system. We have dozens of hours of training. We have deal finding software. We have access to our 100% financing loan. So if you want to check it out, go over to DoHardMoney.com/getting started. Now, I promise our property value analysis. If you want to get yourself a copy of this, the simplest way to do it is to just send a text message with your email address. Just text your email to 435-294-0433. 435-294-0433, and then our system will automatically email you a copy of this property value analysis. You can also go over to DoHardMoney.com/livecast-PVA, livecast-PVA, and Kate is going to throw those in for you guys in the chats, and we'll put it in the comments as well. Guys, if you've enjoyed today, please hit that subscribe button. If you're a new subscriber, put it in the comments, put it in the chat, and let us know that you're a new subscriber. Leave a comment. Please tell someone else about it and get a copy of that property analysis. Now, I'd love to know, What would you guys like to see for future live casts? I've got a list of some topics we're thinking about that are on here. If you want to put those into the comments or into the chat as to what you'd like to see. In addition to that, you can chat those or you can put those on the Just Ask Ryan video of the week. But please put those in the chat. Love to know if there's something else you're thinking of that's not on this list. Please add that to the list as well. I better grab a drink. All right. If you enjoy these and you like them, please share the YouTube livecast link with other people, with some friends, and check out my podcast, Income Hacker. Income Hacker, you can find it on iTunes. You can find it on Spotify, wherever. Alexa, you can find it wherever. Just check it out. And you can see. Now, this is the time we've all been waiting for. Our winner of the week. This is our T-shirt winner of the week. We're sending you out one of our Do Hard Money masks. And this week's T-shirt we're giving away is the I Flippin' Did It shirt. That's going to be coming your way to our T-shirt winner. Now, again, this winner was from last week, from last live cast through the week. We're looking at comments. We're looking at interaction. We're looking at the live cast we did last week and the interaction and things there. And that's how we're determining this one winner. And the interaction, the comments, and what you've done on this live cast, we will announce next week. So you want to make sure you'll join in next week, same time, same place, 6 p.m. Eastern Standard Time on Tuesdays, so we can find out if you are the winner of the week for this last week. So last week's winner is Mike Cardenza. I'm not saying that right. Cardenez. Mike Cardenez. I hope I'm saying your name right, Mike. If you're with us, please give a shout out. And if all of you guys can give Mike a big congratulations of being our winner of the week and let him know how awesome that is, Mike will be sending it out. Now, what I need to have you do, Mike, thank you for your participation last week. I need to have you email support@DoHardMoney.com. The subject line needs to say shirt winner. In the body, put your screen name, which would be your name, and then your mailing address, your cell phone number, and your T-shirt size. And then we'll send it to you. We'll pay for shipping. We'll pay for the shirt, all that stuff. We'll be sending that out to you. And we'll be sending the I Flippin' Did It shirt as well as a mask we'll be sending out to you. So, Mike, make sure you do that so we can get that T-shirt sent out to you. If you haven't already, get this property value analysis. It will help you more than anything in valuing properties. Just text your email over to 435-294-0433. For all of you that have participated, if you want to find out if you're going to be the winner for next week, and this doesn't just have to be people on the live cast. If you're watching this as a recorded video, you can also be our T-shirt winner of the week by putting comments in and the interaction you're going to have in the comments in the recorded video, and you can find that out. So join us 6 p.m. Eastern Standard Time. Now, next week, I'm going to be covering what is hard money and how to get it to invest in real estate. This is a topic that's well misunderstood, and I'm going to be covering what is hard money and how to get it in real estate investing. I'll be tackling that next week. If you haven't already, get a copy of this property value analysis. Just text your email address over to 435-294-0433. Otherwise, make it a very profitable day, and bye for now.